чужим діткам дулі-дулі.
New York City, the crown jewel of the real estate market. Everybody wants a piece. And now, thanks to blockchain technology, that may very well be possible. This $36.5 million development is being sliced into digital shares, or tokenized as it's called, so that investors around the world can own as much or as little as they can afford.
As sort of the early maybe early adopters, for lack of a better word, in terms of verticals? Is there a kind of issuer that seems to be more gravitating towards this?
Absolutely. So actually I'm seeing a lot of activity from real estate. In fact, I told you our first deal is real estate, but actually a lot of activity in real estate. And I actually welcome this a lot because, you know, when you take the risk of, let's say, an early stage technology company plus the risk of crypto, people just freak out and say, oh my gosh, you know, this is
too much.
Everybody understands real estate. Real estate is just a very safe kind of fundamental asset, and so it's easier to think about tokenizing it because you know that the asset's always going to be there. But that definitely seems to be kind of an emerging trend, that a lot of the early adopters of this stuff are tokenizing real estate assets.
Yeah, and we've seen that across the industry. We saw, you know, the Aspen St. Regis, and we've seen like all kinds of. There was a property in the East Village in New York.
Tokenization is a process where some form of assets are converted into a token that can be moved, stored, or recorded on a blockchain. The process of tokenization simply means to digitally represent an asset in the form of a token, to put real-world assets like a land or a house on the blockchain. The first step is to tokenize them. Tokenization of assets would increase an asset's liquidity as it facilitates fractional ownership. This token will contain all relevant information about the asset. Tokens are backed by an underlying physical asset, complete with warranties, insurance, and legal enforceability to create trust in trade. It allows everyone to track resources, prevent wastage, create tamper-proof record of transactions. So if you want to buy gold or a painting but can't pay in full, you can buy a token equal to as small as 0.0002% of the ownership of that asset. Tokenization can change the way world works.
How is it going, everybody? This is your man Sam, founder of Stellar Global, and I have been covering everything that's been going on in the Stellar blockchain and beyond for quite some time now. And as you know, quite frankly, I mean, the speculation of cryptos is fun and all, but the reason why I get so passionate and I get involved is directly because I really see blockchain technology as an avenue to open up and create equitable access to the financial system. And so a couple weeks ago, I saw a fantastic announcement that came out a company by the name of Yield Crowd, tokenized US 50 million portfolio of real estate as yield tokens on the Stellar blockchain. And I had to figure out what was going on. So I reached out, and I've got Obin Olson and his brother, Amariah, here to speak with us about Yield Crowd and how they are tokenizing real estate and opening up to the globe. Thank you, gentlemen, for joining us today. How are you?
Doing
Excellent.
good, doing
Thanks,
good.
thanks.
Thank you,
Appreciate
Sam,
it.
for having us
Love
on
to
your
be
show. Glad to be here, and yeah, we're very excited about our project and kind of where things are going with the tokenization of physical assets and having tokens that are backed by real world, properties that cash flow. So we're very excited.
So let me start off with I'll start off with you, Obin. Are you guys like a crypto background or more professional real estate background? How did you guys get into this particular project?
Yeah, no, actually, believe it or not, we're 100% real estate. So we're real world investors, right? We've kind of figured out the asset game and how to build value over time by buying assets and creating more value by fixing them up or, improving management or whatever in the real world. Before that, we were actually involved in media and production, Hollywood. We produced and directed 4 movies. And before that, we were in the advertising and media space. So always been an entrepreneur.
Wait, pause. 4 movies?
Creative.
4?
Yeah,
Goodness
4.
gracious. Man, I gotta ask, which 4 movies did you guys were you guys involved with?
Well, you'll have to Google the name. They're action movies.
Just put our name on Google and they'll all pop up first thing. About
Nice.
1 million different search results. Yeah, they were distributed through Sony Pictures and
Awesome.
through major outlets online, etc., globally. So they're probably distributed in about 50 countries. So the
Nice.
distributors
No, that's awesome.
obviously pushed them everywhere. But yeah, they're action movies, action thrillers. So we shot a lot of those around Georgia, and then one of them in Alabama as well. So
I want to give a quick shout out. Actually, I'll give a quick shout out. So I've been involved with real estate as well, and it's interesting this connection between Hollywood and real estate. One of my good clients, they're the family of writers, and they owned a ton of real estate. Actually, one of them, his sister, is actually one of the writers behind Bridgerton. She wrote the whole book series. So,
Nice.
anyways, I think that's just really cool. So, sorry, go ahead, Obin. You were talking, man. I got excited about that.
So I was going to say, I think the whole blockchain thing kind of came together when we were doing the assets, growing the portfolio, growing the family portfolio, and kind of wanted to get back into something a little more creative, a little more exciting. And so we saw the blockchain as an opportunity to bring our old skill set of pure creativity into our new skill set of pure capitalism, and kind of combine the two and make something brand new and be able to, take it worldwide and be able to share our knowledge and help other people grow their wealth through our vehicle and what we're doing virtually online, where it's a limitless ability to do so.
Yeah, I mean,
Yeah.
we're really big believers in real estate because we've made ourselves very wealthy from it. We've made our family wealthy from it. We started with basically no capital at all, a few $1,000s, and in the beginning, we were purchasing properties for $50,000, putting $10,000 of renovations in them, and then refinancing them at $120,000 valuation. That was kind of like in 2012, we started buying these small properties, and we did so well on that. We ended up using the capital generated and the equity generated to go to the banks to get large loans to then finance our films, which generated more revenue, and then we put that back into real estate. So it really started with, we didn't have any outside investors, and we kind of started this with very, very, very minimal capital. And we've grown that into our personal portfolio that's worth over $50 million now that we personally own between the two of us. So that story and most of that capital and that equity is generated, and honestly, like since 2017, I would say 80% of that $50 million in assets was generated in the last few years. And we still have a lot of equity in that. And we understand we've done over 20 now. I just closed a deal for 7.3 million yesterday. So we've done over, I think, 21, 22 deals. I'm closing another deal in 2 months for almost 12 million in Arizona. So, and all of those deals we've had an unbelievable success on. Our returns for our equity has been a compounded 154% per year. So and that's for real estate, that's also extremely high. I mean, a lot of times people talk about real estate being 10, 20%, right? So that's because we have focused primarily on velocity of capital and value add. So we find severely distressed or problematic properties, or that one of them we bought 10 townhomes from a bank direct for half price. And we fix the properties in a very short time span. We target 12 to 24 months to turn the property around. So if you buy a property, let's say you buy it for $1 million, right? And then you turn that property around and it's worth $2 million a year or two later, but you only put 20% down. So you have 200K into that deal. Well, you turn the 200K easily, with after the renovation costs, et cetera, you can turn that 200K 4x or 5x on what you originally put in. So you can turn that 200,000 into $1 million, and that's how we've achieved extremely fast exponential growth, starting with zero. It obviously gets a little harder as we scale. Now we're at a much larger scale, and it's also just very intense and very stressful finding these deals, uncovering these deals, because we have to look through thousands of deals to find one deal that's good, and then we have to get it closed. So
yeah, I mean, I think we just went through $3.6 billion of deals, 3.6 billion of deals to find one. That took probably
one $7 million deal. I had to underwrite 25,000 apartment units to buy 100. So it's pretty intense, it's very laborious, and it's fairly high risk, but it's been really good for us, and that's got us to where we are today. So now our focus is, okay, from a personal standpoint, we never have to think about work ever again. We got passive income streams all day long, right? So we want to do something that's interesting, that's creative, it benefits society as a whole. And putting real estate on the blockchain can free it up from multiple jurisdictional issues. It can create really an investment that's much better than any investment that can be created today. Because right now, if you have, let's say, a REIT in the U.S., well, it's controlled by a single exchange. It's controlled by a single entity, a single government. And the possibilities here is, what if you went global? What if you had real estate all over the world? What if your blockchain was multi-jurisdictional, right? So that if there's an issue with a government, like we've seen happening, in especially recent months with global issues, that this would be able to protect investors from jurisdictional problems, and to give them a better investment, that if they need to move from one country to another country, they would have the option to do so, and they would still hold and retain these assets that were backed by something real other than just like a Bitcoin, which is backed basically on what people think its value is, which is okay. But we want to be able to allow global investors to be able to diversify part of that kind of strategy into real world backed assets as well. So that's kind of the idea behind YoCrowd and what we're creating here. And right now we're starting it with only U.S. assets, and we're offering that to global investors. But like I said, in the future, as things go forward, I could see that we would potentially diversify across other jurisdictions as well. And so yeah.
Wow, listen, there's a lot of great nuggets that I appreciate you sharing in what you did. Yeah. First of all, I mean, I think for the audience that's listening, that are not familiar with how real estate works. So myself personally, I've been involved with real estate for close to 20 years, and so I relate to the story of starting from nothing and kind of, taking a little bit of money and turning it and using equity and kind of growing that. I can completely agree with that and relate to it and appreciate that that's how you guys started, because I know it's not easy. And, when you go through those processes one by one, you create habits like what you just mentioned a little while ago of looking at, hundreds of properties just to find one. Because in what he's saying, folks, and I think if you're going to work with anybody, the return is really made on the buy, right? You make your money going into the deal. So I think that's great that you mentioned that you guys have a really strong due diligence period, which I think is huge.
We tend to, and what's been real successful for us is we underwrite the market a lot more than the asset. So what we're looking for is discrepancies between the market and the asset. And we're not going to buy a property that somebody says, hey, it's doing great, it's occupied. Like, that's the last property that I want to buy. I want to buy a property that the market says this is what the expenses are in this market, and these are the revenues, the rent rates, whatever, right? And we get 5 years of seeing that trend and what that market should be, and then we compare the asset to the market. And with an owner that's maybe not that good of a manager, we can find a discrepancy where the property's operating 15-20% below what the market's operating at. That's a property that we're going to buy immediately, because we know all we have to go do is purchase that property and start operating it at market, which is just going to be managing it properly. And immediately, even a 15-20% bump, well, if you have 20% down, that's 100% return that you can have in 1 year. So that's kind of that strategy that we've been using. In moving forward with the blockchain, it's going to be more about diversification and volume. So we want to grow it fast. We want to grow it large. So the deals are still going to be good deals. They're not going to be those crazy, insane type of deals where you have to, gut rehab 100 apartments, which we have experience doing on multiple properties. Ripping out all the plumbing, redoing all the electrical systems, redoing the underground lines, redoing all the drain lines. That's the one we just sold. We paid $6.5 million. We just sold it for $12.5 million in Texas. But that's just, it's very laborious. It's a major undertaking to put together those teams and to turn around those properties. So we're going to focus more on good properties, have good fundamentals, good bones on them,
good markets,
and too many capital problems. Yes, we'll find some that have where there's a small boost to them, because typically that's what we like to find. So that protects our investment, obviously, if you're always buying slightly under market. But the goal here is going to be building a large portfolio that's very diverse and across the United States, from Florida to California. We do stick in the Sun Belt regions. We do not buy anything up north. Population's leaving. Nobody wants to live there. It's not where things are happening. So, and we try to spread our risks. There's a lot of jurisdictional risks. Like if you buy in California, a lot of people are having major problems with the state basically taking their property from them and saying you're going to do this and you're going to be your rates. And so it's kind of navigating all those risks in those different jurisdictions, different states across the U.S., sticking in the Sun Belt regions, which is kind of where the migration is, and diversifying. So that's kind of where we're going now, and that's part of the whole. That's going to be the portfolio that's going to be backing the tokens as investors on board.
Interesting. I want to give a shout out to. I'm sorry. No, go ahead. I was just going to say I want to give a shout out. We're on multiple different platforms. Eugenio, he's a high yield investor out there in Italy. Thanks for checking in. I knew he'll be watching because he deals with a lot of investors out there in Italy, and he does a lot of consulting work and has his own channel. So shout out to Eugenio for checking in. Go ahead, Obin. I'm sorry.
I was just going to say, to add on what Amariah was just saying, we're also diversifying in terms of what we're buying as well. Like we own car washes, we're buying a hotel. Like we're looking at the whole market and going, where is this class of real estate versus maybe this other class, and so like, for example, right now in the US, the hotels are a little bit cheaper because they got beat down so hard from COVID. Now they're on the way up. So we're buying a hotel. We might be buying a second hotel. Those revenues are looking good. Multifamilies maybe, a little bit towards the top. So we're being very careful, only buying stuff that's significantly below where it could be so that we have room to take it up. So if taking it up wasn't quite as high as we thought it would be, we're still going to get a win, maybe not as much of a win, but at least it's still going to be a guaranteed win. So we're looking around at a lot of stuff too, like anything that's a good revenue, that we can put teams on it, we can get third-party management on it, or we can build a team to run it. That's what we're looking at.
I'm smiling, man. I'm smiling listening to you guys talk, man. You guys are talking my language here. It's I've been doing this long enough. And so I can catch BS, pretty easily when it comes to real estate. And everything you guys are saying, I mean, I think people listening now that, like I said, that know me more in the blockchain crypto space are going to have an understanding of why I think the way I think. I don't believe in bad markets, right? I don't care what the market is. Something you just pointed out is you find where the market is. The market money doesn't just die and go to as they say, money heaven. It transfers into different forms and whatnot. It moves,
so
man.
We've been throughout our history, we move where against the pack. We're contrarian investors. So if everybody wants to buy multifamily, I'm selling all my multifamily to them. If everybody hates hotels, I'm over there buying them up for cheap. Right? So, you can really see it. Multifamily cap rates got compressed all the way to like 3 and 4%.
It did. Hey, listen, I was like, what? Hey, listen, we sold a lot of multifamily. I mean, it was to a point where, I mean, like you said, so once again, for those listening that may not be too familiar, I mean, gosh, maybe 5 years ago, I mean, multifamilies would be at a 10 cap, average, you might see in a good area, it'll go down to a 7 cap. I mean, it got to the point, as you said, it was going down to, I'm like, you want to buy this at a 3 cap? Take it.
Makes me no money.
Right.
Nothing. That's what's
it's so
happened.
true.
It's just gone down, and then COVID hit. So instead of everybody using their brain, they took all their money and they all start buying multifamily, and they drive it down even farther and farther and farther because they think it's the safest asset class because it's at least covering the mortgage, I guess, right?
Right.
More and more risk because we all know that the interest rates are going to eventually return, which now, of course, in the last month they're going finally.
Right.
So all those people, you're buying a 3 cap property, but interest rates are 5. There's no spread. You're making negative. So we're seeing big price reductions there. And we just closed a multifamily. I'm against buying multifamily for the most part, but I just closed one because I bought it at a 10 or 11 cap ARV. And yes, I paid a 3.5 cap for it, but it doesn't matter because it's $300-400 below market rents, right?
Right.
So
because of the other point that you pointed out. No, I was going to say the other point that was mentioned earlier, I think by one of you, is that one of the keys is mismanagement. And I can't say how many times I've found money laying on the floor because of somebody not understanding their market. Understanding the market. So you're absolutely right. I love what you just said once again, because at the end of the day, folks, it doesn't matter what I pay for something as long as I know where the value is. So like you mentioned, it was a 3 cap, whatever. Yeah, no big deal. But you understood what you were buying. So yeah, I'm sorry. Go ahead.
We found value in people that were afraid of their tenants. We found value in old guys that have no debt on their property, so they don't care that it's not performing. Right. We found value in somebody that doesn't know how to renovate, somebody that doesn't know how to manage, some management company that's taking advantage of somebody. I mean, the value can be found all over the place.
There was
so let me ask you
building.
this. Go ahead. I got a question after you go.
I was trying to buy. It was $15 million, beautiful glass office building. I think it was bringing in like $3 million of revenue or whatever it was bringing in. the expenses should have been about half. And there was like an extra like $800,000 of expenses going to the management firm. I was like, this is just blatant robbery of the owner. Like, I can buy this property based off this expense for a market cap rate. All I have to do is go in there and swap managers, and it boosts its value by like $5 or $10 million. So it's there's so many different little, whether it's an income problem or an expense problem or some other dynamic problem that that you can find value in deals. It's just like if you look at stock market and it's moving along, but if you look at the actual limit orders, you'll every once in a while see one go up here and one go down here. We're the outlier trade that happens. We're always slowly picking off these bottom trades and then immediately listing them back to the market at market price.
No, that's beautiful to hear. Beautiful to hear. One of the things that come to mind when you're looking to scale, because this is something that I ran into, right? As an investor, is like when it comes to real estate, so much depends on the management side of things, right? The property manager and what they do. What are your thoughts, I guess, as far as expanding? How are you guys able to keep a good handle on what the managers are supposed to be doing to ensure the property?
So the good news is that we've hands-on ran properties all the way up to several hundred units ourselves personally, built the systems, renovated, ran the construction teams, chased the tenants out, done evictions. Like, we have a background of enough experience that we know what a property is, and we know when a number is not right? We know what expenses should look like. We know what the income should look like. We know what the vacancy rate should be. We know what all that stuff. Plus, I'm a big believer in big data, and I pay a lot of money, thousands of dollars every month for analytics and big data, right? So we now can hand it off to large firms. Like, okay, the one I just closed yesterday, I have a firm on it. They manage, I think they manage 100,000 units. They have 2,500 employees. They're a major company, and immediately by plugging my property into them, I get hundreds of years of experience from them that should be able to take care of it fine. But if anything goes sideways, I'll know immediately because I know exactly how a property should perform. And how they were operating it was not exactly how as aggressive as I would have operated it. But now that we've taken it over, because they actually operated it for the prior owner, we're giving them, this is the numbers we've got to hit because we know that we can hit those numbers, right? So we've had a small core team. We have a vice president of operations, and we'll send him on airplanes all the time to fly around to our different assets, right? Any kind of a problem, send him over there, fix a problem, replace the manager, whatever. And he was also running our own employees, our own management teams. But as we grow, we're seeing that plugging into major reputable third-party management firms, and then our office, our central team, is going to be more in charge of auditing the financials, making sure that everything's good, and then going and touring the assets, making sure that the physical characteristics of the assets are good. But that's going to allow us to grow and expand extremely quick, because I could buy 10, 20 properties right now. I could hand it to FPI, and FPI is going to put their 2,500 employees, whatever percentage of that, towards that property, right? So that kind of solves that. It's plug and play. So if I have an issue with one management firm with how they are operating the property, because we have hands-on experience running these properties ourselves, we will find another entity and say, okay, you guys are going to take it over from them, and that's how we're going to be able to scale, plug and play, and and basically plug and play large amounts of employees onto our assets without us having to go do major hiring and run 200 employees or whatever to manage these properties.
No, I think that's great. I think that's great.
I would add to that the same thing with construction. Like, I run many construction teams, and knowing how when you bring a small team in to do work for you, what their value is and what they should be charging by saying, how many men is it, how much materials, how many days, how many hours, and being able to do the math even in your head in real time when you're talking to a construction team and being able to unwind what they're actually costing and then what they should be making with a 20-30% markup or whatever is customized for that particular skill, then they can't get the upper hand, and we keep control over the expenses by knowing exactly what the different, whether it be a roofer or a flooring guy or a plumbing guy or an electrician, what they should be paid. And so when they bring budgets to us, we can go boom, boom, boom. This looks good. Take this out. We're good to go. So it happens.
I think that's huge. That's so important. That's so important, folks. I mean, there's I'll take a little quick pause here. Is the fact that there's a lot of over the years I've seen a lot of different people try to come into the blockchain space and with tokenizing of real estate assets. And I tell you, I started off the show when you guys were talking. I can catch when it comes to real estate. I've put my own money in, and so I can catch BS really quickly. A lot of people don't understand the real estate aspect of it. It's so important. I mean, like myself. So we were investors. We also had our own management company, which we just recently sold. We managed portfolio, my wife and I. And I tell you, I mean, even when our clients that were like, clients like yourselves that knew every single thing, they would always check in on us, always check in, always know, always ask questions. And it was great. I always tell people, you got to trust but verify. And it's very important when it comes to real estate because, some of the vendors, you know what I mean? They'll get lazy sometimes. They'll make up charges sometimes, and let's just say they're honest mistakes, but they do happen, and you gotta check them on it sometimes. So it's glad that you guys have that experience.
I've had bids. I've had $30,000 bids that ended up costing $7,000.
Yeah,
and that's because I said no. How many hours is in it? How many guys are you gonna have on the job? How much is your materials? Add those back up. Okay, it's $5,000. Here's a $7,000 offer. Do you want to take it or leave it?
No, but that's true, and that's the difference between for those investors that are out there. I mean, that's the difference on a buy. I can't tell you how many houses that I've purchased where somebody looks at that same property and says, because of the quotes that they're getting, they think it's not a buy. I can't buy it. It's too expensive. And then you come back around when you know those numbers. That's how you find those deals, because people all the time think that you're just going to go onto the MLS and it's going to be marketed, great deal, make $100,000, come and buy. That's not how it works. Nope. So let me ask you this, guys. So we talked a lot about the real estate. You guys are using Stellar blockchain to tokenize these assets. One of you guys, if you can, maybe talk on that aspect, how you guys decided to use Stellar, and how Stellar is being used in this instance.
Yeah, so when we initially started developing this project, and it's really been about 4 years in the making, but primarily the last couple of years on the development of the actual programming side. So in the beginning, there's like a million blockchains, and what choice do you go down? It's just very confusing. And we were originally planning on Ethereum, but the gas fees and then the idea of a second layer to get rid of that, we didn't like. It was taking them too long to release the second version that's coming out or is out. I'm not sure what the status is right now on that, but
I don't know either.
Yeah, so that's probably going to solve a lot of the issues. We liked it because it had the largest mass adoption, but it had so many problems. It doesn't have a decentralized exchange built in at all. That causes major issues. Having a decentralized exchange that's, I guess, jurisdiction free, that's a massive, massive, massive win for Stellar.
Man, say that again. Not a lot of people understand how important that is. Oh my goodness, it's
critical.
I like this. So, I like this team, by the way, guys. If you can't tell, I like the way they talk.
So having, so we're actually originally more leaning towards XRP. in the beginning, but the lawsuit we're afraid would cause issues with our investors. To be
Right.
honest, we asked a lot of investors what was your to see because we thought Ripple was a lot more, I guess, known about, had a bigger brand name, so it would be had more trades and stuff at that time. But then we asked about we got a bunch of investor test marketing, and we're like, what do you guys want us to build it on, Ripple or Stellar? And we got a
Wow.
50-50. So we're like, okay, well, Stellar doesn't have the issues that Ripple has right now.
Mm-hmm.
So at that point, we made the decision to go with Stellar. So the main reasons to go with Stellar was as an inbuilt exchange, DEX, which is amazing. So we don't have to be an exchange, which means we can
Right.
outsource that, and anybody can trade anywhere, which is fantastic for our offering. The speed at which it executes, it's super fast. It's like 4 seconds. And of course, it's completely free or negligible. It costs 1 penny to move $100 million on it, right? So
Right.
it's
Right.
anybody anywhere. So to me, it's an amazing payment network. And all. Oh, the other thing that was massive and critical is that it also has enough controls from the issuer, so that it's set up for the banking system where the issuer can custody wallets. The issuer maintains control of the issued asset. So in this case, it's yield tokens that we're issuing. We have control of that asset. So if something catastrophic were to happen, and let's say all the accounts are hacked and the yield tokens were stolen, right? Because of the way that the blockchain is built, we can recover them and call them back and reissue out to our correct investors if something like that would happen. And those kind of controls are really very important for a financial ecosystem that's where the company has its own reputation on the line, and the company needs to keep its clients happy, because while total decentralization is amazing and we may get there eventually, there's also a lot of risks associated with it. And whether
Mm-hmm.
you lose your secret keys and now you lost all your money instantaneously. I mean, so many people lose their secret keys and lose their money, or the theft problem where, okay, the tokens are there, now they're gone, now you have no way to get them back. So those controls, and then also the the KYC and whitelisting, critical for
Mm-hmm.
us because we stay compliant with U.S. security laws because we are headquartered in the U.S. So that allows us, whether we do a Reg S offering to foreign investors or a Reg D offering to accredited investors only, that we can control who is an investor. We can monitor our investors. We can make sure we don't violate any securities laws with that ability. So those are kind of the main reasons why we chose the Stellar network. And then of course it being one of the top like 3 largest trading volume assets as well, because we do have to move in and out of our platform. We would love to be able to use USDC. Unfortunately, a lot of wallets are still not supporting USDC on Stellar blockchain, but I think they will in
Definitely
the
got
future.
to. Yeah. Definitely something that will need to be, I know, being worked on. So yeah, that'll be huge.
Yeah. So we do support USDC on the Stellar blockchain. We support XLM. A lot of people who have like a Coinbase or Binance, they just trade whatever they have for XLM. They shoot it over to YieldCrowd. They convert it to USDC on our platform, and then they can buy the yield tokens. So, but
Nice.
we also just we just partnered with Wire. Wire is a global fiat payment processor, onboarding and offboarding. So that gives us access to Visa and MasterCard for anybody that wants to do a test investment. I highly wouldn't recommend it because the fees are really high, but you can. And it's also, we're going to be probably integrating some other tokens like USDC on Ethereum, and potentially maybe like Bitcoin or something as well. And Wire will be handling those transfers and transactions. Wire is also handling all of our fiat offboarding. So if you receive a dividend from our platform, let's say you have 100,000 invested and you get your $5,000 dividend, you can then wire that straight to your fiat bank account wherever you are in the world. So our integration with Wire was super critical to this platform and making it really
Mm-hmm.
build a service not just to total crypto community, but people who also still have fiat assets and want to be able to move in and out of their fiat accounts. The token itself
Huge.
is actually pretty interesting. So not only does it give a dividend, but because what we've created here is actually a bond. And there's several reasons for that. But what we wanted, we look at real estate and we go, what's great about real estate? It's like an almost guaranteed appreciation. Like I think, nine times out of 10 of any given year, it's going to appreciate, right? So it's almost a guaranteed appreciation. Plus it pays you a yield. So our experience, real estate's amazing because of this, and appreciation's created because obviously of inflation. The federal, if the feds keep printing money, they keep creating inflation. They've been doing it for 100 years, so hopefully they'll do it for another 100 years, right? When we use debt to leverage inflation, let's say this year inflation's 10.5%, which is completely insane in Arizona. If I'm leveraging my debt, my property 3x by using debt, that's a 30-40% return leverage just from the inflation aspect.
Absolutely.
Yeah. So the token, we're like, okay, how do we create a token that does what real estate does, but doesn't violate any securities rules or regulations? So we finally, we've worked with many different attorneys and stuff all over the world. We came up with, okay, we're going to create a bond, but it's actually a very unique bond instrument because the bond par value, the face value, actually goes up, it appreciates over time. And the reason we wanted to do this, because we don't want to choke our cash flows and kill ourselves and go bankrupt, right, by paying out huge dividends, which we could do, but then it creates risk on our company. But we still want to give investors healthy returns. So we create a bond that the face actually goes up, right? So it's an asset and it keeps going up in value, just like the real estate. It's kind of following the real estate. It appreciates. And it also pays out a yield. So you're getting the 5% yield and 3% appreciation, both of which increase every year. So it's on 10-year hold, it's close to 9%. That's kind of what's backing the token. And then, of course, the real estate underlying that is backing the bond and paying for all that. But if my company were to come back in and say, hey, I want to repurchase all these tokens in 5 years from our investors because they are bonds, right? We would come and repurchase them, and we're contractually obligated to pay that face value, which is appreciated. And most bonds, like when you trade bonds, typically they have a flat value. So if you buy a bond for $1, in 10 years, a bond's still worth $1, right? But ours is contractually obligated that actually increases every year. So that way the investors know that they have an underlying asset. So when they're trading amongst each other, it's a stable coin, right? But they know that value is going up as long as they trade it at that new value, then they're getting that appreciation. And then ultimately, if we buy it back from them, let's say we bought it in 10 years and they held it for 10 years, we would buy it back from them at a 30% increase on the original sale price.
I'm not gonna mention some of these the names of some of these likes coming in, but I know a lot of people listening to you right now. This is some interesting things that you guys are mentioning. Look, I know that I booked you guys for around 45 minutes, and we're just up at that time right now. I want to say first of all that it was a pleasure speaking with you two. It's clear you guys understand real estate. I love your approach. We're definitely going to be keeping in close contact because I want to follow and follow what you guys are doing. For those that are listening that want to get some more information, what is the best place to go to sign up and give this a test run?
So that's going to be app.yieldcrowd.com, app.yieldcrowd.com is where you actually sign up for the platform. It's a free login. You just do all your credentials. We have 2FA. We have really good security on the site. So you're going to need your Google Authenticator app to authenticate every time you log in. That's basically where you get into the platform. And the platform is, I wish we could show it here today, but it's a full trading platform. So we have order books, we have buy, sell, limit orders, we have crypto in and out, we have the wallet, we have the QR code, and then we have, everything that kind of a traditional platform would have. So I think people familiar with trading, either in the stock market or in some of the crypto exchanges, are going to feel, fairly at home with what we've built.
Yeah,
Nice.
that app address may change. So it's just yieldcrowd.com. People can go there, click, and then they can sign up and then get into the platform, create an investment portal account. They'll have their trading screen. They'll have their fiat onboard, offboarding. They'll have their account balances. They'll have their documents for all the underlying assets where they can do their due diligence on everything once they're in the platform.
Well, look, I appreciate it. at some point we might need to reconnect and maybe do some sort of tutorial to kind of, we can kind of film that out and get people familiar with how the platform works. Because like I said, I think this is important. Buying, crypto as tokens from a speculative angle, I think is great. It's fine. But, once again, this is where things get a little more serious. And I think the opportunities of what we're all passionate about and working starts to come into light. Once again, folks, yieldcrowd.com. Make sure to check it out. Share this video, rewatch it. I know you guys are out there, LinkedIn, YouTube, Twitter. Make sure you spread this, because this is the sort of message that we want to share on behalf of Stellar Global, where we work, and focus on entrepreneurs and developers, investors that are looking at blockchain, once again, not just at a speculative angle, but as a real use case. Guys, I really appreciate you guys stopping by. Hang on tight. We'll chat a little bit longer. Everybody else, next week, we are working on bringing on Pendulum. They have a really nice product. It's a bridge going over to the Polkadot, where they're going to bring smart contracts. And they're focusing on the Forex market. Had a great conversation with them today. And we're going to be talking about how they're going to be utilizing Stellar to revolutionize the Forex market in a really major way. So, guys, once again, thank you for joining us. Hang on tight. To everybody else, we'll be back soon. Take care.
Thank you.